All right, everybody. AMD is down 10% today. The stock's down 50 or 60% year to date. My price target, or where I was interested in potentially buying the stock, was under $58 a share. I did a video on this. You can search back in the channel how I got to this price, and this is how I'm tracking it right here. It's currently at 60.73. Nvidia, I have a price target, or where I would be interested in buying the stock, under 94. It's currently down $6.40 today, and it's at 122. Both of these stocks I thought could actually fall further, and I was not interested in buying them. And that was before we got the recent news, which is driving these stocks down today. And that recent news is that AMD's Q3 sales missed estimates. They just came out with their third quarter preliminary results, $5.6 billion in revenue versus what the outlook previously was for $6.7 billion in revenue. This is a huge miss, especially considering this outlook was provided last quarter and they are this far off of this outlook. What that tells me is that this business could not accurately predict their revenue, or even close to accurately predict the revenue, just a quarter out. That is very concerning, and it's a sign that they are really struggling with demand in this environment for one reason or another. When we see this type of news, we need to reassess the stock, the fundamentals, the valuation, and what our price target is on AMD. And if they beat, we need to do the same thing. And maybe that drives our price target higher and would mean we're willing to buy the stock at a higher price. But when this happens, we have to reassess it to the low side, okay? So I've made a 5-year scenario here, a low, a medium, and a high based on assumptions. I'll tell you where I got these assumptions. They are not just coming from me making them up. Investing is about probabilities. We have to go with what probabilities are most likely to happen. That's how we invest. Okay, so over the next 5 years, I did the low scenario, revenue growth 7%, middle 11%, and high 12%. Then I filled out profit margin 14, 16, and 18, free cash flow margin 11, 13, and 15, a PE. Remember this, 16, 18, and 20, okay? The S&P trades around 16 or 17, so this is a little bit of a premium to the S&P 500. Price free cash flow, 15, 17, and 19, and we're looking for at least a 10% annualized return. Where did I get these numbers? These are the analyst expectations over the next few years for revenue from AMD. They're going to be wrong, but they're a good baseline to make a probabilistic scenario off of. They're looking for 12% in 2023, 14% in 24, 17% in 25, and 7% in 2026. So that's about 12.5% per year when you average that out or get the compound annual growth rate. Then for net income margin, they've got 25, 26, 28, and 28. So they're thinking it's around 28%. If you look at this, I went a little bit lower than 28%. Why? Well, because when their revenue estimates come down, that's likely going to decrease their profit margin. And then I used the company's historical averages as more of a barometer. And I still, in the high scenario, went above both their 1-year, 5-year, and 10-year averages with the profit margin. Same thing with free cash flow margin. When we hit analyze, this is going to give us 3 scenarios, a low, a medium, and a high based off what we believe. And so my low price multiple, my low target price of being interested in the stock would be 34, mid would be 50, and high would be 64. So what I'm going to do is I'm going to go in and I'm going to update my low price of 58.47 after this new news, and understanding the company is now struggling and they're unable to predict their own revenue. I'm going to update my buy price, or where I'm really interested in the stock, to 50, down from 58. Okay, Nvidia is the same way. If I ran through the same thing, I would get a lower price target on Nvidia as well. I'm going to share something that is going to sound a little crazy. I never thought I would say it. I think Intel is actually going to outperform Nvidia and AMD over the next 5 and 10 years. And here's how I came to that conclusion. I don't own Intel, but I'm strongly considering it. I might be adding when my new money comes into the portfolio. So subscribe to the channel. I always share what I buy here on the channel, and I'll let you know as soon as I make a decision on Intel. What we could do with Intel is we could do the same thing, and notice how much lower these numbers are than AMD. We're looking for 3% revenue growth, 5% and 7%. 10, 15, and 20% profit margin, all lower than their historical averages. 10, 14, and 17% free cash flow margin, again, below their historical averages other than the last year where they've been investing heavily. And then a PE ratio, and this is the huge difference right here, and this is why I think Intel is gonna just outperform AMD and Nvidia. They are so overvalued compared to Intel, or maybe Intel is undervalued. We'll find out. But this is a 5 PE, a 7 PE, and a 10 PE. And if we look back, we had 16, 18, and 20. So that's 3x the PE, 2x the PE, and 2x the PE in the different scenarios. And then we're looking for 10% annualized return. We hit analyze, and this would tell us the prices we'd be willing to buy the stock at. So Intel is currently a buy if I believe that the mid scenario or the high scenario are true. If I think the low scenario is true, the stock could drop by another 50%. I think more likely to happen would be this mid or high scenario for Intel, meaning the stock has some serious potential upside. I need to do some more work. This is not a recommendation. This is just myself tracking my stocks and my own buy prices. I think that a low or mid scenario is more likely for AMD, but even if the high scenario happens, then we're still only looking at a $64 buy price and the stock is at 60. So it's almost fully valued, or where I would want to buy the stock at if I believe this high scenario to be true. And I'm not confident in the company right now to say that I believe this high scenario to be true.